Hello, everyone. Good evening. This is the last session of a very busy day. And interesting thing is, through the day, we had so many sessions, and digital and fintech has been a common thread, actually. So it's good that, we are wrapping up with this subject at the end of the day. And I will, like to talk a bit about, India driving the global digital economy. In 2022, the numbers suggest that we've had 70 billion digital payment transactions, which is highest in the world. So do you all see India becoming a cashless society, or do you see India coming anywhere close to the top three, cashless countries, which are listed as Sweden, China, UK? So, Mr. Azbe, would you like to take that question?
So, I think all of us are aligned with less cash than the cashless, right? I just hope CBDC makes some magic to go to the cashless. But I think all of us, ecosystem, the regulator, and everybody is aligned with the less cash society, and that's what we are looking at. So in my assessment, even if next 3 to 5 years time, if we go back to the single digit, the cash to GDP ratio, right? We should be happy as a ecosystem, because see, it's a large country. We have the challenges which some of the other countries do not have. While apart from the geographical challenges, the languages, the education awareness. So in our assessment, the less cash society with the single higher digit cash to GDP ratio, in my assessment, would be a success to the India's digital payment journey.
Anybody else who would like to add to this on India becoming a cashless society? It'll be nice to have all your comments on this.
Sure. Should I go? Okay.
Yes.
So I completely agree with Dilip in terms of the assessment that from a cashless we have to move to less cash, and we can't compare ourselves with Norway and Sweden, which nearly only 5 million, maybe 7 million population. India is a very diverse country, lot of languages, lot of challenges on the ground. But I'll share some stats as far as Fino is concerned, and as you would know, Fino is largely a rural company, and we follow a phygital kind of a model with presence in more than 95% of the districts. So having said that, our customer segment is largely people in the 2 to 5 lakh rupee segment. So when we talk about cashless society, we are not talking about people in Bombay. We are talking about people who are there in rural and the hinterlands of the country. So in our own ecosystem, nearly 1/3 of our customers are now started to use UPI. So that's a big, big plus, which I see in terms of nearly 15% of the customers have started to download our app. And on our platform, we are doing more than 6 crores of transactions on the UPI every month. So that is the data which shows that we are progressing quite well. And as Dilip said, if from a 10-15% digital to 25, 30, 40% digital is something which one should aspire to. Becoming a cashless society, I think, is a far-fetched dream as far as India is concerned. But less cash is something which is more achievable. And I would say a lot of fintechs, a lot of banks, digital companies have started to focus on the mass segments, which is 700-800 million people. How do we make them digital? I think that's the way the direction is. And the data shows that, yes, we are in the right direction.
And, you should probably also, for the benefit of the audience, dimension what we are talking about. So there's about $1.6 trillion of personal consumption expenditure that takes place in India. And of that, currently about 55 to 60% is still cash. So phenomenal progress made, particularly in the last 5 years in terms of the digitization, but there's still 57% of that volume which is still cash. So there is a fair bit of distance to traverse and a significant amount of cash displacement opportunity that continues to be there. And this is across, obviously, UPI, all the RTP rails, not just UPI, cards, etc., etc. So quite a distance to traverse there.
I'll just add to what Sandeep, I'll just add to what Sandeep mentioned. I think, while of course, digital transactions have grown significantly, I believe that in the next 5 years, both cash and digital transactions will coexist. Because even today, we have possibly almost 30 lakh crores of cash in circulation. And of course, as a percentage, that will keep coming down. But 5 years down the line, we will definitely be possibly the fastest growing, because a lot of innovations we have done over the last 5 years, which have given us these results. And those innovations, and a lot more innovations which are there in the pipeline, will really help accelerate digital. But in the medium term, or even in the next 5 years, both will coexist in my view.
Yes.
Hi, I think I'm going to echo what everyone, the panel says. We've got a long way to go. Less cash, I think, is the mantra, should be the medium-term mantra. As you know, cash is still growing. ATM withdrawals still growing, etc. And we've got, but I think the efforts done by the government, by institutions like NPCI and all the networks, and of course all the banks and the banking financial string, I think is wonderful. Expanding the market. So you've seen digital grow phenomenally. Great. Cash is still growing. And I think we've got to continue, plugging away at increasing acceptance of digital and keeping on going that. Two things which need to change, and these are more mindset. So one is this whole thing about compliance, tax avoidance is one phenomena I think still lies. The other is this whole reason why the government schemes are being pushed on to sort of electronic, which is, this whole leakage of money transmission which happens. These are things which are, how do I say, these are more of a mindset issue. So that's all, those things also need to be tackled, but we've got to continue plugging away.
So my next question is for Mr. Patel. We need to talk about regulation. Every speaker throughout the day has spoken about regulation. So let's get into that area. And do you think there's a level playing field when it comes to regulation in this payments and digital segment?
So after the passing of the Payments and Settlements Act, right? So RBI has become God now. So on almost every aspect of the digital payments, notifications are coming out, right from the second factor authentication to nodal bank to you name it, in the sense that even customer grievance to every other thing that is there. So now, with also the licensing coming in, with the payment aggregators getting a step, yes, it's getting into a level playing field. But what happens is that there is a pace that the digital payments is growing. These kind of regulations sometimes are beneficial in the long term, but in the short term, it creates a lot of havoc, in the sense that, say, a recurring billing, legislations, or many other things that come in. So sometimes I feel, since I started 22 years back, we were much happier then, just simply doing the business happily and solving all this. But as regulations come in, it makes it very difficult, because what happens is that there are various parts of the government. One part of the government thinking zero MDR and let's make it free and other things. On the other side, there is RBI that if you want a license, you have to be a positive net worth. Otherwise, come on, quickly wrap up your business and go. So one side we have to do the business for free, and the other side there is positive net worth and other things coming in. So yes, regulation is tricky, but I think only the experienced guys will be able to go through that.
So Mr. Ganesh Anant Narayanan, COO of Airtel Payments Bank, I would come to you on regulation. You were the first payments bank to be launched in India. What has been your experience as far as dealing with regulation and regulatory authorities are concerned? And do you think the sector is over-regulated? And if yes, what is your ask from regulators really?
Sure. So yeah, we've been now 6 years in the business. We've got approximately 55 million monthly transacting users. Process transactions worth 24,000 crores every month. We're growing on revenue and we're profitable. I think that's been the journey. I do believe that over the last 3 to 5 years, some of the regulations, for Payments Bank have changed with the times. A classic example is where the limits, which was a lakh, which is what was the licensing conditions at that point in time, has actually gone up to 2 lakhs. Some of the video KYC regulations which came in, which really worked well for our digital customers, where they could actually open a bank account, seamlessly. Use of CKYC, in a far more proactive manner. I think some of these things have worked very well. And I do believe that, it's helped us grow in a very responsible manner. Because fact is, we are playing with people's money. And we need to be responsible towards that. We need to be conscious of that and work in a very sensible manner. So I think that's working well for us. I think, and I'm sure Rishi would also agree, I think one common, theme which all of us have for the regulators to allow maybe small ticket lending, as an enabler, because we've got the access. I think between the payments banks, there are more than 500,000 or maybe even close to 1 million BC agents in Tier 5 and Tier 6 outlets. Airtel Payments Bank alone has approximately 4.5 lakh BC agents in Tier 5 and Tier 6. Now think of the power of maybe an assisted account aggregator platform, where we reach out to a customer in rural who does not possibly have a credit access. We are able to sort of get the KYC done and do the due diligence. Now, if we have the ability to sort of give out a 10,000 rupee or a 20,000 rupee loan at a reasonable price, I think it does very well for the customer. Otherwise, the customer has no choice but to go to the money lender and pay maybe 5 to 7% per month of interest, which in my view is criminal. But there's no choice that the customer has. So solving for this, I think we are very well placed. Because we've got the infrastructure, we've got the relationship with the customer, we've got the trust which customers have with us, because they do anywhere between 16 to 18 transactions a month on our platform. This is Airtel Payments Bank customers on our platform. So I think a combination of all of this, if we can make sure that we are enabled with small ticket size lending, I think it will make a big difference to the economy per se. It will do well for to drive financial inclusion, and I think it will help well for the payments banks universe itself.
Thank you. Mr. Rishi Gupta, MD and CEO of Fino Payments Bank. So this is also called Figure Not. Is that so? Yeah. So how was it coined, Figure Not?
I think a lot of what we do is from the field. So in one of our field visits, I think one of the merchants said Fino, F-I-N-O, means figure and not. So we, Fino hai to figure nahi hai. So that from there we made it Figure Not.
So taking off from the theme of the session, in search of a business model. So it is said that, players really haven't found the business model. It hasn't really taken off well. But do you think Fino Payments Bank has found the model?
So it's never over till it's over. So in a way, I will not say that we have found the business model. All of us are grappling, all the payments bank are grappling with what kind of business model will it sustain with. So what is important is that unlike many other fintechs, digital companies where the models are largely around investor money, fortunately for payments bank, the players, they are looking at sustainability as the business model in the long run. So from the time we started 5 to 6 years ago, that time also there were a lot of questions whether a payments bank can really make money, what kind of model it should come out. I think a lot of us are following similar kind of models at a different scale because we came at a different points of time, but similar DNAs and similar concept of making it an asset-light, scalable model, where rather than setting up a high fixed cost around branches and but more driven on technology and merchant ecosystem, we have been able to expand ourselves quite fast. Fortunately for us, we had the India stack coming at the right time. So whether it is UID, whether it is NPCI, whether it is the Aadhaar ecosystem or the mobile ecosystem, I think a lot of that came at the right time when we were starting the bank. So all of that, along with the model in which we build up the entire merchant ecosystem, we were able to make it a very sustainable model. We are now, in our 5 years of journey, we have more than 3 years of profitability. And we believe this model, which I would completely echo with Ganesh, can be put to use in a very scalable, in multiple products also. So like we have restrictions on deposits, and we have restrictions on lending, we have restrictions on FDs and RDs. So from a regulator point of view, our endeavor has always been to present to them the fact that this is one of the largest infrastructure which has been created in the banking in the last 5 years, more than 2-3 million points across the country. It can be put to a better use where we can bring all those 70-80 million people who come to our platform every month, where we can offer them loans and also raise our deposits and around those some of those products which we have been discussing. So model is continuously evolving. I would say from the state at which we were 5 years back, but completely everybody had written off the model from the day one. We are in a much happier state now.
So from model, I would like to go on to, a little bit deeper into model. Partnerships of various kinds seem to be a go-to model for many companies in the digital payment segment. Mr. Parag Rao of HDFC Bank, you are also experimenting with partnerships. So what do you have to say? Is collaboration the way forward?
Okay, thank you. I'll answer this question in the context of the previous question you asked about, is regulation sort of creating a level playing field? Okay, because regulation does play a role in any business model as we go forward. The way I look at, and it's probably a contra view, I look at regulation saying that level playing field, there should be level playing field for consumers. And I think that's the role of any regulator and any industry, forget about, not just about the banking or the financial services industry. Every segment needs to have rules by which partners play at, and those rules will keep on evolving as the segments grow. Okay, if you build a business model based on the absence of rules, then obviously there's going to be some thing coming in. And today, what you're seeing is a period in which we had some sort of regulation at point in time, and we're keeping on increasing. So, I guess business models will need to keep on changing. Related to one of these important factors in financial segment, we have to live with the fact that regulation is there. Coming to the point about collaboration and partnerships, I think...
Take the mic a little closer.
Okay, sorry. Yeah. Coming to the point about collaboration and partnerships, I think in the last 4 to 5 years, or 6 years you may call, with the advent of what we call digital and different ways of expanding markets, bringing in technology, making products and services much more easier and accessible as compared to the conventional way in which banks do, I think whilst in an ideal scenario, every player should be able to adopt and become a master of all. Okay, but that's not reality. And so therefore, the role of partnerships and collaborations is simply about saying that, can one partner bring his strengths? Can the other partner bring his other complementary strengths? And together, can you make a 1 + 1 = 2 or 4 or 6 or whatever, depending on how it is. And that's, I think, the way we do. Because, and if you ask me, in today's world, especially with at the stage at which we are in 2022, I think I see 3 approaches to the market actually playing out. And if you look at every initiative done by most partners, I think it's coming out. So one is this whole approach to the market of what I call platformification, approaching the the market in a platform way rather than just a point product way. Embedded finance, that's the other key pillar on which I think the approach to the market is being. And of course, disrupting existing or conventional use cases and expanding the marketplace. Okay. When you look at all these 3, I don't see any one player, any bank, large bank, new bank, any fintech or even any network actually having the competency to straddle all. And that's where partnerships come into play. And therefore, I personally believe that partnerships is the way to go to make that 1 + 1 = 11.
Thank you. Mr. Sandeep Ghosh, Group Country Manager, India and South Asia, Visa. As somebody representing the card industry, what does the digital world mean to you?
Well, that could be a very, very long answer. So let me stitch together a couple of things that you have been talking about, and in some ways, it's also very illustrative of what digital really means. So we talked about regulation in one of your earlier questions. I think what tends to happen sometimes is regulations from a consumer perspective focuses on security and controls, but it's equally important that regulations also keeps an eye on friction. And you have to get the balance between security, controls, and friction right. And so if you think about what Vishwas was talking about, regulations on standing instructions, card controls, 2-factor authentication, a lot of that is important in a market, but you also need to make sure that these regulations then don't end up creating a lot of friction, because one of the key aspects of digital is that it's got to be paperless, seamless, frictionless, etc. Right? So that's one. Second thing is, in a digital world, things are kind of interconnected. So when Ganesh and Rishi and others talk about the importance of why payments banks need to have the ability to lend. So you've got customers who've been acquired, who are transacting, who keep balances, and they also have a need for credit. And just as the RTP rails in India, notably UPI and other forms have democratized digital payments, you also have a need for democratization of credit. And there's a huge role that payments banks can play in that respect. So again, that's another important aspect of digital, which is the democratization of various things. We've started with payments, but it needs to extend to credit. And then, you talked about partnerships, and, rather than give you a theoretical answer, I mean, you look at everyone on this panel, as Visa, we partner with Parag as the largest issuer and acquirer in the country, HDFC Bank. We partner with Vishwas, who's sort of, playing a role in the payments ecosystem with CC Avenues. We partner with the payments banks who issue currently debit and prepaid cards because they can't do credit cards, but they also now are expanding into acquiring BIN sponsorship. And you would sort of say, yeah, that's expected, but in some ways we have further opportunity to partner with Dilip and NPCI, because we have a payment gateway offering which processes transactions of all networks. So we would process a Visa transaction as much as a RuPay transaction or a Master or an Amex or whatever. So, partnerships is fundamental to everything digital. As Parag said, no one organization will have the stack to do everything at all points in time. And I just gave the example of every entity that is represented on this panel. We look to genuinely partner with them. I don't mean it just in a superficial sense. Yeah.
Thank you. Mr. Asbe, I'll come to you next on a bit of regulation only. So has the time for payments bank passed, as other instruments have really crowded the market, UPI, RuPay, e-rupee, CBDC, retail, you name it, it's a really crowded market. So do you think it's something that we should just move on from?
So sorry, I don't understand your question.
I'm asking, has the time for payments bank passed? Should we phase it out because, the market is so crowded that, we are looking at other models?
So, ma'am, Rishi and Ganesh, both are our customers. So, you want me to say against our customers on this?
No, I don't. No.
So, okay, that was on the lighter note. And see, ma'am, I think the regulator and the government, the way I see the evolution of the India payment system is having the choices, right? Because it's a 1.4 billion population nation, right? And the population is at various stage of evolution by themselves, right? So, for example, and I give this example multiple places, that maybe the top 200, 300 million Indians is like Western Europe. The next 300 million Indians is like somewhere like developing country, and the rest 300 millions are like trying to become developing, right? So that's the way I look at the country. And I think in this kind of a situation, the choice to the customer is very important, right? The second point which I want to make is, so while you could say UPI, IMPS, debit cards, credit cards, the IMP, NEFT, you take wallets, right? So I think all the payment choices, when we look at the digitization today in the country, in my assessment, we are not even 1/3, right? Pure digital form of transactions in India, right? While the penetration might be on a 50% on value, large volume, which is still on cash, which are predominantly the small ticket transactions. So I think India is a high volume, low margin game, right? As far as the payments are concerned. And I think lot more action is still required to map that remaining 2/3. So I'm making a business case for you guys. So
Yes, absolutely.
so I'm just saying that everybody, all the stakeholders are very much necessary. Everybody has a role to play in my assessment, and the payments bank are actually looking at their niche to provide, whether it's UPI, APS, cards, right? They have a segment and they are trying to service that. And while the small finance banks, the full function banks have their own segment. So looking at the country like this, I think I don't foresee an issue on the business model to the payments bank. So that's one question.
I think just to modify her question, I think what she really was not talking about the payments bank per se. I think she was talking about the old payment instruments versus the new payment instruments. I think that is what
Oh,
you must be referring to.
Yeah, I was saying that the universe has become so crowded now,
so crowded.
so crowded that, is it relevant to have payments bank?
No, no, of course it is. That's why I said, I think we still have one-third population and we still have to get two-third population covered. So I think the institutions are fairly relevant, and these institutions have a very large scale as well. Airtel comes backed by the Airtel uh, telecom operator. So, Fino has been a very strong player in the financial inclusion right from last 15, 16 years, right? So in fact, we all learned financial inclusion from Fino, in that sense. So and RBI has really thoughtfully given the licenses to the entities which can actually make an impact in my assessment. But obviously, it's a long-term game, right? I don't think 2-year, 5-year, it may not serve the purpose because it's a journey and it might need a decade to really see a value out of this journey.
Ma'am is trying to promote payments bank need to move to the next level of regulation and make a more inclusive bank by becoming a digital bank or a small finance bank. Maybe that is what.
Yes, that is another possibility. So I'll move over to Mr. Patel. How do we change yesterday's regulations to make things more relevant? You have a tough task.
I think regulations is constantly evolving. Look, if you look at any kind of commerce, right? There is credit, there is debit, and there is cash, right? If you have seen the evolution of cash during Demon, it was 18 lakh crores. Today, around 31 lakh crores of cash is in the market. So that is also growing. Debit. Debit also, if you see what was with the advent of UPI, UPI has today cannibalized a check, it has cannibalized a demand draft, it has cannibalized pay order, it has cannibalized NEFT, RTGS, and any kind of ease of doing P2P payments. So UPI has cannibalized that entire other debit mechanisms that were there existing in the market, right? Credit also, if you see today the offtake, right? Today the offtake in credit. Earlier, if you see on a macro perspective, the household debt today in India is 11% of the GDP. Now you compare to the markets like US, it is 84%. So this clearly states that there is a huge offtake of credit in the market. Now all these three things are going. Regulations is like something like the RBI will have to constantly evolve. It can't have one static because we have seen many of those notifications put earlier are continuously being amended on a monthly basis in some cases to keep up with the times and the change that is happening. So I think RBI is in a very consultative approach. We heard the governor in the morning, right? They are consultative. They are consulting the industry, and I think those are constantly evolving. So I think it will keep up with the pace, and you have seen the growth overall in payments and other things, right? So it will keep evolving.
Mr. Rao, you plan to double your card user base. So how does it really fit into the digital ecosystem?
So, like I said, we're a full suite bank. We offer the entire range of payment forms. UPI, wallets, debit, credit, everything else. Okay, what I talked about was one business P&L, which you're talking about, where the opportunity is right. So Dilip mentioned the top 200-300 million. Okay, maybe that's the first step of being the target for credit cards. We're a vastly underpenetrated market as far as credit is concerned. It's very clear that India does require an expansion or democratization of credit in whichever form. Credit cards as a product form is one of the ways in which credit is used, and so therefore we have aggressive plans on that in that phase. But then let me also tell you that we have equally aggressive plans on many of the other payment forms, okay, because the idea or the objective which we have as a payments business within the larger full suite bank is to ensure that you and that's our objective to sort of lay the railroads for carrying any form of interoperable institution, which is basically moving money from point A to point B, and issue instruments in whichever form the customer, the choice which Dilip talked about, whichever the choice the customer wants to. So that's our core role.
And the market is still, there's a huge distance to cover. I mean, you have roughly about 400 million people in the country on whom some form of credit data and history is captured. You have maybe 220, 250 million who are cardable. You have 80 million credit cards and hardly 40 million unique card holders. So that market can grow 4 to 5x, irrespective of what's happening. And I'm just talking consumer. Globally, there are some great examples in markets of B2B payments and commercial payments on card rails. Now, it doesn't have to be a plastic or a metal card. It's just card rails. So that's a huge opportunity, which is hugely under-leveraged in India. And there are lots of benefits of that as well. So I think the overall, everyone is agreeing. And at the end of the day, it's about giving consumers choices. And which is why we also believe that it's not about national versus international versus anything. It is actually open loop, interoperable systems, which give consumers choices, and they will pick and choose. And even the most, even in rural markets, even customers who don't have the benefit of a lot of, knowledge, they're pretty savvy. They figure out very quickly what works for them. And I think that's the best way for us to go as a market and as a country.
Let me add to that, follow through to what the thing is. I talked about one of the pillars of growth which we're going forward, which is market disruption or market expansion. Well, I'll sort of point out to the latest initiative which NPCI has launched out, which is you can link your RuPay credit card to your UPI account. Now, that the way, if you look at it democratically, I think has the opportunity to do the 3x, 4x, 5x on the credit card market, which we talked about, because you have people on the electronic rate rolls. They are used to now debit to account. These are the people who have a track record of electronic payments, and they need credit, or at least portion of them will need credit. And we've only created the rails in which credit can be easily accessed by these millions of customers. So the market expansion will definitely happen.
So related to that, I want to talk a bit on innovation. Mr. Anant Narayanan, your payments bank recently announced eKYC face recognition. So do you think business will look up after such moves?
Yeah, I personally think, and I spoke about it at the start, the reason why digital transactions have grown to such a large extent has been led largely by innovations. Of course, there's been a lot of consumer education and awareness being done, but the bedrock is really innovation. And I think as we go forward, and Airtel Payments Bank also firmly believes in that. For example, today, a customer in rural can actually use Face Auth and open a bank account very, very seamlessly. And we have enabled it for all our 475,000 BC agents in rural. The retailer does not need a biometric device, and the retailer can use the smartphone, take a photograph, capture the credentials, and we are integrated seamlessly with the UIDI database, and the bank account gets opened. We are now also partnering or working with NPCI to get that same functionality done on AEPS-based cash withdrawals. So there are multiple such innovations which we believe once it sort of comes in, will really take up, dramatically improve experience, because you're seeing that the conversions on Face Auth is anywhere between 7 to 9% higher than a fingerprint based authentication, and that's our experience. So we believe that with more and more such innovations, there will be better adoption. A second innovation we brought in more than a year back was on the safety platform, where we launched a product called SafePay, which is very unique in the sense, maybe first in the country, maybe even the world, where we used the telecom network to actually authenticate the transaction to ensure that I am the one who's actually initiated the transaction and getting the transaction done. And it really helps do away with mule accounts and brings a third factor of authentication on the entire safety platform. And that's actually, we are now processing almost 250,000 transactions a day on SafePay, which is a very, very important aspect. And it's also become amongst the top 3 key concerns for consumers after COVID. So it's a big problem we're solving. And you've seen that with a lot of these innovations coming in, consumers starting to trust the system, trust the process, and possibly using it more and more often.
So the union budget is just about a month away. Any wish list from the budget? That's for you, Mr. Anant Narayanan, and all of you, in fact, I want to ask.
Digital payment incentive would be one ask from our side. It has been there. Last year, government has been kind enough on last year. Even this budget, last year's budget continued that. So we are hoping that even this budget will have the digital payment incentive. That's very important for the ecosystem, because there has to be some incentivization for the ecosystem to provide the service, right? I'm saying nobody can run the platforms for free of cost. So I think one key ask is could be the digital payment incentive to the government to continue to the finance minister.
You've had your meeting with the finance minister, and have you submitted your?
Madam, I think everybody has been asking about that. So it's not only NPCI, PCI, banks, the fintechs, the merchant acquirers. Everybody has been asking for the digital payment incentive. So it's not only NPCI in that sense.
Yes. So is there hope this time in the budget that there will be major announcements in the fintech side, digital banking side?
See, obviously, I think the digital payment is at the forefront of this government, and we have seen the attention and focus, not now, but even starting from Jan Dhan Yojana till now. I believe there would be something, and in our assessment, incentives would be required to at least sustain the digital payments growth what we have seen over the years.
Yes, Mr. Patel.
Right. From Payment Council of India on this digital incentive, I think 2 years back, there was, I think, provision made in the budget of 1,350 crores. I think last budget was 1,500 crores. Now, as PCI, we have asked for 6,000 crores for UPI and 2,000 crores as incentives for RuPay debit card. So that, the costs for the payment aggregators is somewhat revert. I don't think they will be reaching that, but I think even a 50% escalation from what currently they give. We have also asked that the way they are giving out these incentives, right? One was always that don't call it incentive, call it a subsidy, because incentive attracts GST. So it's like God give it and God take it away.
No, but government has issued the notification today that it is exempted from GST.
Today?
I'll send you that.
Okay, superb. So I was not aware. So that is there. Second part, we have also asked the government that we want to increase the acceptance base, right? So the real incentive, if we are doing at zero MDR, because this is actually government paying for the merchants acquiring of UPI. So today, say if 1,300 or 1,500 crores is what government is paying, it's paying for all the UPI transactions. We've said that if government is using the taxpayers' money, it should be this subvention, this incentive or subvention should be only for the smaller or the medium merchants, because we want to actually increase the base. Because if you see 2,65,000 crores of money of cash is withdrawal from the ATMs, and then these salaried guys withdraw it and then use it to pay to the Kirana guy or wherever that is there. We need to reduce this. So if we increase the acceptance base, right? So it's a small merchants. If this more money is spent on those, like today, say, out of this 1,300 or 1,500 crores, majority or 60-70% is taken off by the processing UPI on Amazons and Flipkarts. Now, these guys, for the other alternative mechanism like a Visa debit card or a MasterCard debit card or any other things, they are anyway paying a MDR. So for UPI on this, if it is given only for the smaller merchants, it will go a long way in increasing that. That's one part, of course, apart from the taxation that is there. And also, as Parag ji also said in the start, that tax avoidance. Like if you've seen to grow the acceptance base, some kind of a tax incentive for smaller to medium merchants for accepting electronic payments will go a long way in increasing the base, because I'm also part of the Payment Infrastructure Development Fund created by RBI. We are trying so massively to grow the acceptance base. So if these kind of tax incentive will go a long way for the smaller merchants if they start accept. It's there in Sweden that so many South Korea, so many cases where tax incentives are given and the acceptance base has gone through the roof.
Thank you. That's a nice long wish list. So we cannot not talk about cryptocurrency as we wrap up this session. Mr. Ghosh, what's your thought? Should it be banned, allowed, or should it be kept in this no man's land?
I don't think I'm the right person to talk about that, quite honestly. I think every country decides in terms of what they're going to permit in terms of regulations, and both the Indian government and the Indian regulator have been very clear about their stand on crypto. And therefore, I mean, when we operate in different markets, we are first and foremost governed by the rules and regulations of that market. There are various things that are happening globally around, crypto wallets and things like that. There are use cases that people are still working on, but clearly in India, this is not something which is favorable. And whilst we, as an international company, might support some of this in jurisdictions where it is permitted, as far as India is concerned, right now it's off the table.
So we can take a couple of questions from the audience. Is there anyone wanting to ask? So Vinu will give the mic.
Good evening, everyone. I'm Naveen from Hyperverge. Thanks for giving this opportunity. My question is to Dilip sir. We are talking about, we are talking about payments exploding through UPI, payments exploding to other modes of instruments. But I would like to hear about what's our vision to make transactions more secure. Right? Today we have UPI-based PIN. But is there any other alternative method that we are exploring to make transactions more secure?
Mr. Rasbe.
So, see, it's a great question. See, today we have, we are all the networks, banks have to operate in the two-factor authentication mechanism, which is again, thanks to RBI, it's first of its kind in the world. And now many countries we see that adopting the two-factor authentication policy, which RBI formulated about 10 years back. So all the efforts, initiatives are two-factor authentication. Now, what is the experimentation going on? Obviously, you would have seen Aadhaar, AEPS, which we came up with the biometric authentication along with UIDI, helping acting as an authentication agency on behalf of banks. We are also looking at some of the other behavioral analytics and those kind of things to see what can be done. But as on date, the what you have and what you know, right, which is the standard two-factor authentication policy which you apply, the device or the card what you have, and the PIN is what you know, right? So that even if your device is lost, your money in the bank is. In fact, some of the UPI apps over and above that, the what you call the app passcode as well. So it's actually not two-factor authentication; it's a three-factor of authentication. But I think it's an interesting area for all of us to work on, and maybe there is some more progress to be made to really come to the level of launching some of the new authentication methods to the ecosystem. But as far as the low ticket is concerned, now RBI has permitted the cards on which the EMV cards on a tap and pay model, which again all the three networks are very bullish about, and the amount limit is also very high. And also we have launched the UPI Lite now, which is up to 200 rupees. Now the device authentication. So how do we ensure that the value of the transaction actually and the risk associated with that transaction, and what is the the balance between the risk versus the convenience, as some of the panel members were talking about, how can it be striked? So we are constantly evaluating, and thanks to RBI, they are also open to such ideas that how can we really make customer, how can we strike that balance very effectively without causing any risk to the ecosystem? Thank you.
I can maybe chip in on a couple of things. So one is, you also saw the move by RBI to implement tokenization. Part of that is also about security, because now no one other than a issuing bank or a network can actually store card details. There have been a lot of compromises of card details globally, which have happened when a merchant's ecosystem got hacked, etc. Now, tokenization has not only introduced an added element of security, but we are seeing better payment success rate of cards that are tokenized. So it's actually had an additional benefit. And look, at the end of the day, one of the other things about security is you can have many factors of authentication, but if a customer actually gives away their PIN or their OTP, then even 10 levels of authentication is not going to help. So education, literacy is a very, very key thing which all of us in the ecosystem have to also work on, because you just can't keep building safeguards, because each of these safeguards actually creates friction. And the card controls and all have also created friction. When people's cards don't work, they say, what's going on? It's because you've got specific card controls which you have to unlock explicitly. So we've got to get that balance right. That's what I was saying earlier. But yeah, it's a focus of everyone sitting on the panel here.
Yeah, Mr. Rao. Yeah.
Let me add to that. So, and I think I must start off with this. I think the focus on security by the regulator is not just now, but I think it's been there for the last 10, 15 years. We talked about second factor authentication, which we all as consumers use, but you should know that there are even things like what we call TLE, terminal line encryption. All your POS machines are so completely guarded, it's unhackable practically. So those are also the conventional means in which we got probably one of the safest systems. Okay, coming to apps, which are the most vulnerable, you now have most banks and most people actually, deploying wrappers, if you may call so, which stop your mobile or some fraudster to be able to force download a fake app onto your this thing, which sort of scrapes your thing. So these are all the kind of other initiatives we should do. Today, most of the frauds which you see, a lot of the frauds which you see, and it's increasing trend, is what you call phishing and wishing, when you fall prey and trap to so-called fake SMSs or fake calls, etc. That, to my mind, is today's current sort of kid on the block, which I think as an industry, I think we need to sort of take cognizance of and really move on. And in my view, I think it actually requires a lot of collaboration between not just the banking and financial sector, but also even the telcos, because those are the carriers of this thing. But I think, let me assure you on behalf of everyone here that not just the regulator, but all the industry players have probably risk as, if not number one, number two priority in terms of the infrastructure which we're sort of laying down to ensure that the payment ecosystem is safe.
I just want to add one more point to what I think Sandeep mentioned, on customer awareness. One of the things which I think a lot of us have, Airtel Payments Bank definitely is doing, is to also use AI/ML to understand, amongst the 55 million monthly transacting users we have, who are the customers who are likely to be, in the vulnerable area, and possibly sort of dealing with them separately as compared to possibly all of us who we believe, we are in control, we know what's happening, and so on and so forth. So use of AI/ML is also a very important aspect in actually bringing down frauds and putting in more controls in the space. That's another important aspect.
Any other question?
Hello, am I audible? Yes, so my question is specifically to Mr. Rishi Gupta and Mr. Ganesh A, for the payments bank industry. So with the 75% SLR and the 20 and the 2 lakh deposit limit, the payments bank, let's be honest about it, is not the best business model provided by the RBI to us. And I think Mr. Rishi Gupta was very vocal about the fact that we will, and RBI gave them a side door exit to convert to an SFB very soon, like within 5 years instead of 10 years. So how important will it be for, and Mr. Rishi was also very vocal that we will convert to SFB as soon as possible. So how important is it for the payments banks like Airtel, Fino, Jio, NSDL, everyone to convert to an SFB and pivot the model completely? Thank you.
So, So without getting into real specifics about Fino or any particular bank, I think the way the model has evolved the fact that within the constraints in which the regulation is, there are constraints in terms of the amounts, constraints where you can deploy the money, constraints on third-party approvals which are there. I would say the payments bank have done fairly well from the time we started our journey to the time where we are currently. Can the model become better? Obviously, the model can become better. As Ganesh also said, and I also said initially, the fact that we have the rails going to the last mile in the country. So can we leverage it better? We can definitely leverage it better. What is stopping us from doing it is the license or the regulation which is there. So if RBI permits uh, for us to get into credit or move or convert a payments bank or convert all payments bank into digital bank or give an option to a few of them to convert from a payments bank to SFB, I think we can use the infrastructure better. We can obviously service the customer better. And when the customer is coming to us on liabilities and transactions and the data which we are building, we can use the same for credit. I think for a business model per se, it will be a good conversation. From a customer point of view also, it will be a good conversation. So we will have to see how the regulation evolves from here. Could be a digital bank, could be a SFB. We'll have to wait and see how the regulation looks at it, or the regulator looks at it.
I just want to add to what Rishi mentioned. See, for us, and that's true for most all payments bank, there are three sources of revenue. One is, of course, what you mentioned, which is revenue from customer balances. Second is transaction income, and third is fee income, which is revenue from cross-selling and upselling financial services and so on. It's important to look at the revenue construct in as a sum total of all three, rather than judging a payments bank on its ability to make money from customer deposits. That to us is possibly 10% of revenue. 90% of revenue actually comes from the remaining two. And given the fact that we have 50 million plus monthly transacting users coming in, even a 3% penetration of insurance on that has the potential to actually double or triple or quadruple, our revenues. So the opportunity, with the existing ecosystem is very significant. Of course, as Rishi mentioned, if some of these things do happen in terms of allowing small ticket lending, I do believe that it can do a world of good to driving financial inclusion, and it can, of course, accelerate, profitable revenue growth for all payments banks. That's what I would say.
Last question.
Hi. Thanks a lot. My name is Bhanu Pratap Singh, and I represent a company called Tubulite Communication as the CEO and Director of Engineering. Is it audible? All right. My question is around in the context of the evolution that we see today, especially in last decade, everything seems to be on the hyper speed. Of course, technology evaluation, customer side expectation evaluation, financial evaluation. We are not anymore competing bank versus bank. So how you see open banking in that context?
You an open bank, Parag? He's asking.
Yeah, absolutely. Well, the way open banking has different meanings depending on who asks that question. The way we look at open banking is about significantly enhanced availability of products and services available at many more touch points than they are today, okay, in a seamless manner, safe and secure manner. Okay, what does that mean? It means that today, conventionally, if you can access a product or a service walking into a branch or through a telecalling or on the net or mobile, can those products be available at many more touch points which you touch during the course of your normal life? Whether it's at a merchant, whether it is embedded finance when you're purchasing X product, is it bundled along with another product seamlessly, etc. And that to my mind is open banking. As an outcome of that, so one way of looking at open banking, it's an enhanced distribution game. What you need to do to ensure that get that kind of level of distribution, you're talking of therefore having a network, a digital network which is safe and secure, number one. Two is you need to therefore also tackle issues like whom are the partners you could, because there's no one entity which can do it all. How many people do you need to partner? Whom do you need to partner? There are now rules and regulations about sharing of data. Okay, typically, that's one of the interpretations of open banking. Is it only about sharing data? I don't see that as that way. In the process of partnership and having a relationship between a principal and a distribution partner, whomsoever it may be. There is a safe and secure way of sharing data. Ultimately, the idea is to ensure that products and services are made available in a simple, seamless manner, transparent manner, and in a safe and secure manner. And today's technology enables a lot of that, whether it's embedded APIs, headless APIs, whether it is using surrogate data, using substitute data to ensure that customers can access. So that's my definition of open banking. And I think, and we are doing a lot of work in that to sort of leverage our large distribution channel to be able to do that. Let me give you a very crude form just to tell you. So BC network, what is that? You can choose to call it a DSA for liabilities, but the BC network is one example of how banks or institutions have actually expanded, and that to my mind is open banking, because they are now represented. There are lakhs and lakhs of representatives of banks in the hinterland, which has actually created a significant amount of penetration into the rural areas. Okay, so that's my definition of open banking, and I do believe that each one of us on this panel and our own colleagues outside in the industry are working in some form or the other in terms of pushing this open banking envelope.
Thank you. With that, we've completely run out of time, and thank you so much, everyone, for sharing your thoughts. Thank you so much.